Hi, I'm Todd Schoenberger, Managing Director of LandColt Trading, and this is another edition of Wall Street Lingo. I'm here today to talk to you about corporate earnings. If you're any type of an aficionado of Wall Street or just a regular old retail investor, you will know that now is earnings season, and it's critical to how stocks move. Where I'm going with this is that you are right now looking at obviously the Dow 30 stocks reporting their corporate earnings or quarterly earnings, but you're going to hear a lot about bottom line earnings and top line earnings, and both of them are crucial and vital in as far as being the octane that's going to move stocks higher or even lower. But the big thing about bottom line earnings is that that will be the net number that investors want to focus on, and that's what traders here at the floor focus on. Top line earnings will take a look at cash flow, how much a company is making, revenue stream that's rolling in, and what other acquisitions that they're looking for as far as acquiring additional cash flow. But the bottom line number is the net number. So when you look at the overhead expenses, meaning everything from labor costs to electricity to marketing to anything that they need to do, you're looking at that net number. So here at Wall Street, you have a number of analysts that will come up with expectations for those companies, notably the S&P 500. And you have 62% is the historical average of S&P 500 companies actually will beat their earnings estimate on that bottom line. Now recently, over the last few quarters, we've had a number of companies that have actually topped that 62%. For instance, just last quarter, 80% of all S&P 500 companies beat their Wall Street expectation, which has been fabulous for stocks, and you've seen that as far as the performance goes over the last few months. But moving forward, traders again and investors will be focused on that bottom line number, and more importantly, they're also going to be looking at forward projections. You're going to hear a lot about that on all the news shows, the financial news shows. You're going to hear the talking heads talking about bottom line earnings and forward projections. If a company has great bottom line earnings, but is also saying that the future is not looking that great and could be quite dire to corporate earnings, that will have a negative impact on stocks. So a couple of things to just keep in mind when you're looking at companies right now, especially if you have a company that's about to report earnings. If you feel that the company is not going to give good forward projection, positive forward outlook, you may want to stay away from that type of a company just temporarily, but then you want to also look at the history of that company.